In tonight's Dollars and Cents, an update on a sweeping tax law we first told you about at the start of this year. The Tax Cuts and Jobs Act is now permanent due to the recent passing of the One Big Beautiful Bill. As a result, a Sacramento-based financial expert I talked with says you could end up paying less in taxes and have more take-home pay. We first talked about the Tax Cuts and Jobs Act a few months ago at the beginning of the year as something to watch for in 2025. It was scheduled to sunset at the end of this year. Right. Things have changed. It is now permanent. And there's some good news for taxpayers. Tell us about that.
Yeah, and I would say, Laura, it's probably permanent with a small dose of steroids, if you will.
Joseph Eschleman, president of Tower Point Wealth, says if the Tax Cuts and Jobs Act did expire at the end of this year, most Americans would have experienced significant tax increases.
It was going to revert back to the tax brackets prior to that legislation passing.
The Tax Cuts and Jobs Act was originally passed by Congress in 2017 under the first Trump administration. It substantially changed federal tax deductions, rates, and credits. Now, the current 7 federal income tax brackets instituted back in 2017 are not going away, and the income thresholds for each bracket are also being adjusted upward to account for inflation and cost of living increases.
The bottom line is if the liability of an ABC 10 viewer or of a person living in here in California to the IRS is reduced, ultimately, that's putting more money back in their pocket.
Since 2017, tax filers and joint filing taxpayers have enjoyed the benefits of a higher standard deduction, which the Act more than doubled. The Big Beautiful Bill raised the standard deduction even more, reducing taxable income for many households. Take a look. For single filers, it went from $14,600 to $17,000. For married couples filing jointly, the standard deduction went from just over $29,000 to $34,000.
Anytime we're able to realize additional cash flow and additional money in our pocket because we're paying less to Uncle Sam, I'm perhaps a bit biased as a financial advisor, but so much the better.
Eschleman says the larger standard deduction means more income staying in your pocket before taxes are collected. Eschleman says since 9 in 10 tax filers already use the standard deduction, this expansion increased the standard deduction's value further. The Tax Cuts and Jobs Act also capped the deductions for state and local taxes at $10,000 a year.
But the new Big Beautiful Bill actually increased the SALT to deduction from $10,000 up to $20,000 a year. So for a lot of ABC 10 viewers, a lot of Sacramentans, it's a huge increase in how much they're able to deduct off of their tax return and hopefully ultimately put back into their pockets to do with what they want.
In the next few weeks, we're taking a deep dive into more tax benefits you could see thanks to the passing of the One Big Beautiful Bill, including the increased child tax credit and the so-called senior bonus. Remember, you can watch more of my Dollars and Cents coverage streaming right now on the ABC 10 Plus TV streaming app. The app is free to download on your TV. You can also email me your questions at lpainter@abc10.com.